It's back. Now recognize the chairman of the full committee, Mr. Jordan, for 5 minutes.
Thank you, Mr. Chairman. Mr. Crane, what percentage of publicly traded equity shares are held by institutional investors and pension funds?
It's a very large percentage. I forget the exact number. It's north of 80, I believe.
80%? And because of that, most shareholder votes are cast through proxy voting because the shareholder can. Is that right?
That's exactly correct.
Okay.
Yes, sir.
And proxy advisors advise or recommend to the institutional investors and the pension funds how they're supposed to vote. Is that right?
That's correct.
And is their advice followed?
Pardon?
Is their advice followed? Is the proxy advisor's advice typically followed by the institutional investors and the pension funds?
It's absolutely followed, and in many cases, their shares are automatically cast by the proxy firms in line with those recommendations.
So,
yes.
so the institutional investors and pension fund are doing exactly what the proxy advisors did tell them.
That's exactly correct. Yes, sir.
Okay. And who are the two largest again, who we've been talking about?
ISS and Glass Lewis.
ISS and Glass.
Hey everyone, thanks for tuning in. If you're new here, I'm American Interest, your independent political analyst here to break down complex congressional moments with facts, context, and a healthy dose of critical thinking. Today, we're diving into a particularly charged exchange from a recent House hearing featuring Congressman Jim Jordan. His focus? Proxy advisory firms, specifically the overwhelming influence of two major players, ISS and Glass Lewis. These firms, which most Americans have never heard of, are having a huge impact on how corporate America is run and potentially on the broader political landscape as well. Let's break it down.
ISS and Glass Lewis, and how much of the market do they control?
97%.
97% of the market, 80% of the shareholders, the equity shares are with institutional and pension investors, and their advice is followed 95% of the time.
That's essentially correct.
Wow, that's pretty big. That's pretty big. How much money are we talking about?
Trillions of dollars of equities across the market.
5 trillion, 20 trillion, 30 trillion, how much are we talking?
I don't know the size of the market, but it's a large number of the equity markets in the United States.
My understanding is it's at least $20 trillion. And there's,
sounds right to me.
And the other side says, nothing to look at here. Nothing to look at here, really. That seems like there's a lot to look at there, and that's why we're having this hearing. Now, what kind of advice? So their advice is followed 95% of the time, 70% of the market, over $20 trillion. What kind of advice are they giving?
It's advice on everything that comes before shareholders. It's how the company is run, how the executives are paid, the shareholder proposals that have been discussed. It's everything that comes before the shareholder base for a vote.
What kind of advice are they given in a political context?
We know that ISS, for example, recommended in favor of more than 80% of ESG shareholder proposals in
pro-ESG, pro-DEI?
As a general rule, yes. Not 100% of the time, but yes, as a general rule.
Vast majority of the time?
I would say yes.
Okay, so kind of leaning to the left, right?
I think that's probably a fair characterization.
Their advice is followed 95% of the time. They have 90% of the market. 70% are they're given advice to, and it's always, almost always, left wing.
I think that's a fair characterization, yes.
Is that how you see it, Mr. Egan?
I have no reason for disagreeing with that.
What about you, Mr. Griffin?
I think that while it varies by year, and we've seen sort of swings with somewhat mirroring the political election cycle,
is that an accurate picture? Is that an accurate framework?
Overall.
Okay. Now, but that's not the end of it, is it? Because it's even worse. Because this duopoly not only offers proxy advisor services, but consulting services as well.
That's exactly right.
Okay. So you can go consult with them before they give you the recommendations that are always followed. And if you don't consult with them, they might give you recommendations that in many ways harm the company and therefore harm the shareholders. Is that right, Mr. Crane?
It is, and we've seen that when companies get negative recommendations from the advice side, they'll immediately get a solicitation from the consulting side saying, hey, wouldn't you really like to have us help you out next year to avoid those negative recommendations from our friends down the hallway?
Yeah.
Pretty concerning fact pattern.
Will you pay the protection money? Will you pay the shakedown?
Exactly.
Holy cow, such a deal. Such a deal. And Ms. Minow was part of it all when she worked at ISS, is that right? The question wasn't for you, it's for Mr. Crane.
I understand that, but he doesn't know the answer and I do.
Well, no, I wasn't asking you a question.
It is wrong. I did not allow
You might be able to do the consulting services and the recommendations.
I did not allow ISS to do consulting when I was president.
Does ISS do consulting now?
ISS does do
Well,
consulting now.
Shazam,
and
there
they're-
you have it. There you have it. My question, the way it works is the members get to ask the questions and to the people they want to give the answers. My question was to Mr. Crane. I appreciate you jumping in, Ms. Minow, and telling us that ISS does now offer consulting services in addition to the proxy advisor thing, which is the problem. Which is, well, not the full problem, but certainly part of the problem. Is that right, Mr. Crane?
I would agree with that, yes, sir.
And then you can even go maybe one step further and say on the platform, no competition's allowed, which I sort of get Ms. Minow's argument on the Amazon issue, I sort of get, but it's almost like they got this thing rigged from start to finish and it's two companies. And the other side says, nothing to look at here. Well, I think that's kind of ridiculous. And I appreciate the chairman and his work on this important issue. With that, I yield back.
Chairman yields back.
Proxy advisory firms give recommendations to institutional investors, think pension funds, mutual funds, and other major stakeholders on how to vote in corporate shareholder meetings. These aren't just votes about who gets to sit on a board. These are decisions about CEO pay, mergers, corporate policies, and social responsibility initiatives. And according to Mr. Jordan, over 80% of public equity is held by institutions that rely heavily on these advisors. So, when ISS and Glass Lewis say vote yes or vote no, those recommendations are followed 95% of the time. That's power. Now, to be fair, this isn't new information in financial circles. The proxy system has long been criticized for its opacity. What is new here is the political framing. Jordan claims this duopoly leans heavily left, pushing ESG environmental, social, and governance proposals that align with progressive values. He cites data showing that ISS supported over 80% of ESG-related shareholder resolutions in 2023. That's significant. Here's where it gets political and controversial. Jordan's argument is that these firms are essentially shaping corporate policy in a progressive direction, bypassing both Congress and the general public. Think of it this way. If most major companies are influenced by shareholders, and those shareholders follow proxy advisors, then these firms become gatekeepers to America's corporate agenda. Now, as a neutral analyst, I want to emphasize this. There's legitimate concern when a small number of private entities wield this much influence without much transparency or competition. Whether you're left, right, or center, that concentration of power should raise eyebrows. But here's the nuance Jordan misses. Many investors, including conservative ones, are increasingly demanding ESG accountability. Why? Because issues like climate risk and DEI, diversity, equity, and inclusion can affect the bottom line. These aren't just ideological positions. They're business decisions, too. Let's also talk about what Jordan calls a shakedown. He accuses ISS and Glass Lewis of a conflict of interest offering both proxy advisory services and consulting services to the same companies. The implication is clear. If you don't hire us for consulting, we might not recommend your shareholder proposals. That's a heavy allegation. And while the idea of a pay-to-play model is disturbing, it's not unheard of in consulting industries. The real question is there evidence of harm? Are companies being unfairly penalized or strong-armed? If so, that's a serious problem. If not, then the issue may be less about corruption and more about bad optics. Another important takeaway from a hearing is the lack of competition. Jordan points out that ISS and Glass Lewis control 97% of the proxy advisory market. That kind of dominance in any industry is problematic, especially when there's little regulatory oversight. And here's the kicker. Platforms like institutional investor portals often don't allow other advisors to enter the space. That makes it even harder for innovation, accountability, or ideological diversity to emerge. This part of the hearing, in my view, is where Jordan makes his strongest point. Markets function best when there's choice, competition, and transparency. That's something both sides of the aisle should agree on. So where do we land? Congressman Jordan paints a picture of shadowy corporate influence machine driven by progressive ideology. That may be an oversimplification, but it's not without substance. Proxy advisors do have power. They do lack transparency. And yes, they are shaping corporate policy in ways that often mirror broader cultural trends. The left might say, what's the problem? These proposals are aligned with modern values. The right might say, this is backdoor policymaking without voter input. Both have a point. The real question is, should these firms be regulated more closely? Should there be firewalls between consulting and advising? Should institutional investors diversify who they listen to? Those are fair, important questions, and this hearing opens a door to that broader debate. Yes, proxy advisors have outsized influence. Yes, the duopoly is troubling for market transparency. And yes, there's a risk when ideology drives decision-making without checks and balances. But let's not fall into the trap of tribalism. This is bigger than left or right. It's about how money, influence, and accountability intersect in modern capitalism. What do you think? Are proxy firms the unseen hand behind corporate wokeism, or are they just reacting to investor demand? Drop your thoughts in the comments below. If you found this breakdown helpful, hit like, subscribe, and turn on notifications so you don't miss future episodes. I'm American Interest, and I'll see you next time, right here where the politics meet the facts.